one of the best things that Satoshi ever did was never be outed as whoever they or he or she was, because now we don't attach sort of our opinion of whether Bitcoin is good or bad to a person. And the government can't go and arrest and put this person in jail for violation of whatever laws they said that Satoshi may or may not have violated.
The content presented on this podcast does not in any way represent investment advice. The information is provided for educational and entertainment purposes. Crypto assets are considered risky investments. You should always do your own research before investing. The opinions expressed here do not represent those of CoinDesk's editorial staff.
You're watching CoinDesk Spotlight. I'm your host, Jen Sanasi, joined by my co-host, the founding editor of the Protocol newsletter, Brad Cowan. And it is our pleasure to bring you into this candid discussion with BitMEX co-founder and Maelstrom Chief Investment Officer, Arthur Hayes. Arthur, welcome to CoinDesk Spotlight.
Thanks for having me.
Here on Spotlight, we really want to get to know the folks behind the headlines. And so I'm going to start here. Humor me. We know that you grew up in the United States. You went to school in Buffalo, born in Detroit. If you think back to that boy who was growing up here in the US, what was it about him that made crypto and the ethos of crypto so appealing to you when you learned about it?
So I got into gold early in my financial services career, back in, 2011 or whenever like the spike happened. And I was living in Hong Kong, and I was sort of like anti all this money printing kind of thing, and like, well, I'm going to buy some gold. So I would go down to the bank in Hong Kong and buy gold coins. I got a security deposit box, had a box full of coins, and I learned a lot about market sizing. I bought at the top of the market. Market dumped 40% in my face over the ensuing years. And that sort of set the stage for the philosophical underpinning of like why I got what Satoshi's white paper was sort of saying when I read it for the first time. Oh, okay, this makes a lot of sense. I get the gold thing. I'm into it. But here is a new thing. It's a completely new ecosystem. When I got into the game in 2013, very few exchanges, very few financial products. The meetup had like 15 people when I would go in Hong Kong, off and on. So it was the way to get in.
That was like a Bitcoin developer meeting, or what was that?
No, so I was one of the founders of the Hong Kong Bitcoin Association, and it was all types of people with finance, developers, just meeting in a bar in Hong Kong, talking about Bitcoin and crypto back in the day. Obviously, it's a lot bigger organization now, but that sort of like spoke to me because I did have this distrust of the financial system, having lived, my first day on the desk was Lehman went bankrupt in 2008. And Deutsche Bank was one of the few banks that didn't take a government bailout. However, Deutsche Bank lied about its entire balance sheet. That's why they didn't take a bailout. And obviously, it's one of the worst performing banks over the ensuing years. Contrast that to the American banks, which all took government bailouts, paid massive bonuses the next year and following years. And so you see the difference of like, oh, I thought this was supposed to be free markets, capitalism, but it's just another socialist experiment. And your wealth is predicated on how well you can suck the government teeth.
That's an interesting word to end on. But yeah, no, I mean, I don't know. I covered that story on the front lines, Arthur, for Bloomberg. But yeah, but you're right. I mean, also Deutsche Bank did actually borrow a ton of money from the Fed in secret when the loans, like in the emergency programs. But that's super interesting. Jen, you want to?
Yeah, talk us through. I mean, talk us through that experience. You starting to understand how crypto, I guess, fits into your life and how the ethos kind of solves some of your problems to getting to BitMEX.
So I started trading it in 2013. My first Bitcoin that I bought was on MTGOX. I did a bunch of research and I layered it down to MTGOX or Bitstamp. And the reason why I chose MTGOX was I thought the Japanese banking system was a little bit more robust than one in Slovenia. I thought they'd be less likely to steal my money. So I went with MTGOX. And I bought my first Bitcoin there. And the reason I bought it was I had discovered this small derivatives exchange called ICBit. And they were the ones who invented the inverse futures contract. And I was selling these futures contracts and buying Bitcoin, and the spread on it was 200% return per annum at the time, which is huge. And I was I did this sort of basis trading at the bank, and you make 10 basis points, and you thought you were killing it. So here I'm making 200 basis points, and I'm just rolling these futures every month, and I'm doing arbitrage between China and other places around the world. So it was fun. It's exactly in my skill set as sort of an arbitrage trader, and moving into the Bitcoin ecosystem. And as I started doing these trades, you learn more about sort of the market structure, who's involved, who the exchange owners are. And sort of at the end of the day, after doing this for 6-7 months, I was like, well, I really like this. I'm not very talented as a trader. This is a very easy trade. I was just clicking buttons with my fingers. So why don't I try to do something that's a little bit more, has little bit more longevity, a real business? And so that's when I decided, then let me create my own derivatives exchange, because that's what I know how to do. That's what I like to do. And that's my experience so far in the crypto trading ecosystem.
And what were your TradFi colleagues saying at the time?
I mean, all my friends were very supportive, actually. I think, at least in a sales and trading floor, everybody recognizes that we have no skills. We're overpaid for what we actually do. And we're, one day away from losing our job and now being unable to actually earn the sort of living that you were earning at the bank. Nobody else pays these types of salaries for how little skill that we have. I think everybody recognizes that, this fatalistic sort of ethos within on a trading floor. And so when you see somebody going out and trying to sort of better themselves and do something else to sort of make a real income for themselves outside of the bank, I think they're very supportive. They might not have understood Bitcoin or what it was, but they understood why you would want to sort of in your late 20s, when you didn't really have sort of family commitments, try something out before you had to make that few $100,000 a year salary to pay your mortgage, school fees for your kids, all these sorts of things. And you couldn't really have the flexibility to try to exit from the banking rat race. There's one guy, I remember, a Canadian guy, when I joined at Deutsche Bank as an intern, and he said, everybody's got a bullet with their name on it, just waiting to get shot.
Wow.
I won't say that's what it felt like at CoinDesk in last year, crypto winter, but Arthur, and then
the important parallels for us.
But okay, you are known for this famous thing that it's famous to people who are really into this stuff, but the perpetual swap. I mean, that is become absolutely the market standard in crypto markets. They have them on dexes now. I mean, curious, just if you can, there's probably a lot you can say about this topic, but just from beginning to kind of where we are now, like, what has that been like to kind of watch that?
So the genesis of the perpetual swap, and I'd like to tell this to a lot of founders, is that, so me, Ben, and Sam, my co-founders, we answered every single support ticket ourselves. And there's only one or two other employees back in May 2016. And so this takes up a lot of our day, answering questions from customers. But it gives us an insight into what the problems are with our product. And we get the similar sort of question a lot, which was, hey, BitMEX, are you guys scamming me? I had this position, and on this thing called an expiry day, it disappeared. They didn't understand what an expiry was for a futures contract. Oh, hey, BitMEX, why does the futures contract trade at a much different price than the spot market? Is this a scam? They didn't understand interest rate parity and why a futures contract trading in the futures should trade at a different price than the spot price today. So internally, we had this dialogue. Was like, we're getting all this feedback from customers. They don't understand our product. They're slagging us off on the forums and the internet, saying that we're bad dudes and running this bad platform. Is there a way that we can create a financial product that mimics margin trading, has very high leverage, but doesn't expire? And so that was a challenge. And so, we knocked our heads around, and sort of we came up with this swap concept. The first iteration of it, we used the BitFinex interest rates And back in sort of May, June 2016, crypto was, I think it was like $300 or $400, whenever it was, and it was rapidly appreciating. And the interest rates weren't high enough to convince people to come in and sell this product. So we had this massive divergence in terms of the swap price versus the underlying spot price. So we went back to the drawing board and we came up with this sort of self-correcting mechanism, which is the innovation here, really, which is looking at the previous premium over the last 8 hours and charging that as an interest in the next 8 hours. And this is the completely new thing called the Perpetual Swap. And we rolled this out one day. We just announced
the funding rates you're talking about, right?
Funding rates. So we changed the funding calculation, and the market hated it. There's a massive reaction. People are, what the fuck are you guys doing? We like futures contracts. Just do it like OK Coin. Why are you guys trying to be different? And, there's even people internally who are like, at BitMEX, like, why? Let's just go back to futures. The customers don't like it. And I was very adamant that we have to do this. This is solving a problem that we all recognize. Let's stick with it. And we stuck with it. We kept tweaking things. And sort of, by middle of 2017, we're like, holy shit, this product is actually working. Our trading volume is going up. We're seeing a lot more activity on the platform. And that's sort of the genesis of the Perpetual Swap, and sort of the rest is history. It's the most successful crypto product ever, traded the most on every single exchange, and trillions of dollars in notional every year, because it solves a problem. High leverage, no expiry date. It looks just like margin trading. So the retail crypto trader can understand it intuitively.
I don't want to go down too deep down this rabbit hole, but now you have projects like Athena. I guess you've studied that one, and basically structures being built off of the funding rates. Do you have any thoughts on whether those are well built or sustainable?
So obviously, I'm a founding advisor of Athena.
You are? Okay, I didn't know that. Okay, that's interesting.
So, yeah, and Guy got his impetus for his idea from a blog post I wrote describing exactly how to design this product back in, I think, 2023 or 22, whatever it was. And so he built this product using the spot Ethereum staked and a short Ethereum US dollar perpetual swap. And so the math is simple. It's a basis trade. People have been doing this for over a decade. The Athena team has been very good at packaging this in a way so that DeFi investors can literally just, go on Curve, get some USDE, stake it, and now earn this basis rate minus, I think, the take of Athena, which is, I think, 10 or 20% of the interest income. So they've built a very robust product. They're not an exchange, so they're able to get the buy-in from all the major exchanges to support them. This is why we couldn't have done this at BitMEX. We couldn't have created Athena because Binance isn't going to take the BitMEX coin. OK is not going to take the Binance coin, right? We're all competitors. But Athena is a neutral party. They got investment from everyone, support from everyone. They built this product, and it's the fastest growing stablecoin in history. So I think it's close to $3 billion of circulating supply. I think number 5 largest stablecoin in terms of circulating supply. So it speaks to the success of Guy and the team, what they built, and sort of the strength of their technical abilities.
But the concern is, like, if funding rates go negative for a prolonged period of time, it gets in trouble.
Of course, and if funding rates go negative for a long period of time, then people redeem your USDE and you go back into US dollars or whatever, right? Or get your base Bitcoin or Ethereum. You don't have to stay into this product. So I know people say, "Oh, the funding rates go negative." Well, then leave. It's not like you have to stay. This isn't. That's
part of the design, right? That's exactly the way yeah. Well, we're getting pretty far down the DeFi rabbit hole. Jen,
Arthur, you said something interesting to me. It was that your customers had a problem, and instead of trying to educate them on how to use the platform that already existed, you built something that was more intuitive to what your customers wanted. And I'm curious, given that you invest in crypto projects now, you have a say in the future of crypto projects. If you think that crypto founders are doing enough of that. We always hear about we need education for this mainstream adoption that we always talk about, and not that we need to build a product that solves the problem of the folks who might come to this platform.
So I think, fortunately and unfortunately, we were very broke at BitMEX back in 2014, or even back 2016, whatever. Nobody was investing in derivatives exchanges or exchanges for that matter in general. So we weren't based in San Francisco or Beijing. We're in Hong Kong, zero VC appetite to fund the type of business that we're in. So we had to make money. And so if we had an idea and it wasn't working, we had to change. Now, a lot of crypto founders have lots of money. They've raised all these private rounds and they have an idea. And instead of adjusting to the reality of maybe this product isn't working for the market that I'm trying to serve, they just throw more money at it until they run out of money and go broke. So I think it is a blessing in disguise that we were broke, because it made sure that we had to focus on actually making money instead of doing bullshit vanity metrics to please some venture capital firm. So I think that's what made us very focused on what our customers want, because we charged money for our product. So the only way we got paid was building a good product for our customers.
I think more people need to take a page out of that book. It just feels like people are wasting money, throwing money all around here and building things that maybe there's not a real problem for yet.
Yeah, I mean, great. It's nice to have funding and all that. I actually think that a lot of projects are doing way too many rounds. Do one seed round, raise $1 million, build your product, get out there, start testing, and have a product that people are willing to pay for, not just token emissions. And if you go that route, then you're going to be very attuned to the customer base that you're supposed to be serving, rather than serving some, the VC partner who says, I need to have these metrics, so they give you another $10 million in your next round at an up round price.
All right, I want to turn the conversation a little bit now. We couldn't have you on the podcast and talk to you without talking about the infamous event back in 2020. Let's start here. When you reflect back on what happened at BitMEX, when you had to walk away and face those charges, what do you take forward? What have you learned from that? And what are you taking into what you do now and in the future?
Well, I think at the end of the day, decentralization is key. We ran a centralized company, and that comes with certain risks, especially when you're in an industry that's trying to completely upset the way things are done. And so, yeah, we were a centralized company. There's laws, we broke them, and we suffer the consequences. It's one of the reasons why I love decentralized protocols, is because you're able sort of to take the human element out of it, take the Arthur Hayes or the CZ, the Sam Bankman-Fried away, and it's literally just about, do I serve customers? Do I have good technology? Is it transparent and open and all these sorts of things, rather than, having these company-specific issues, these people-specific issues. One of the best things that Satoshi ever did was never be outed as whoever they or he or she was, because now we don't attach sort of our opinion of whether Bitcoin is good or bad to a person. And the government can't go and arrest and put this person in jail for violation of whatever laws they said that Satoshi may or may not have violated.
How possible is that, though, right? We have Bitcoin that's truly decentralized. Maybe Brad is going to fight me on this one too. But how possible is that to not have one central point of failure in this day and age if you're trying to bring a project to life? Like, is it possible to have another Bitcoin?
It's dependent on what you're trying to build. Some projects are predicated on decentralization. If you're trying to build the next social media platform that can't get shut down by a government authority, like what's happened to Pavel at Telegram, decentralization is key. You must be decentralized from day one, or you can land your private plane in Charles de Gaulle and get arrested for running a platform, right? Or you can be Elon Musk and get your platform banned in Brazil. So I think there's certain projects and products that have to be decentralized. And there's certain other things that are just using sort of the really secure public blockchain to build a centralized product, which is fine. It just depends on what you're trying to do. Be very clear about that. Don't try to be decentralized when you don't need to be. And if you're running a social media platform and you're trying to do centralization, then you might suffer some consequences.
It's fascinating to hear you talk about this. But I mean, regarding decentralization, maybe you think about what is the standard that you're going to be held to, right? Like, is this going to be resilient against, attacks from hackers, or, is this going to be resilient against, somebody falling asleep when they were supposed to be doing something, or is this resilient against a sovereign attempt by, a superpower like the United States or some, to try to take it down? do you believe that we're going to get to that point where these decentralized networks are resistant to?
Well, I mean, most of them aren't
attacks.
decentralized. That's the thing, and we find that out only in times of extreme stress. We find out, okay, well, actually, that thing you said in the white paper is not true because you were compromised in this particular fashion. So if you are going to be, if decentralization is key to your business model, then you have to be all the way decentralized as if you were Bitcoin. That's the standard. It's very, very difficult. It's very, very hard to do that. It takes a long time, which is why your incentive mechanisms need to be very aligned with the actual people using it. It's not like, you do a massive ICO, you hand a bunch of tokens out and then think they're going to get decentralized. Like, it's a slow process. It's not overnight. And so, again, not everything needs to be decentralized is the thing. Most people think a lot of things need to be when they don't need to be. But then the things that actually need to be decentralized, people need to be honing in and making sure, okay, does this actually make sense on what they're claiming they're supposed to be doing?
Do you have a favorite decentralized exchange?
Well, I am an advisor of Drift, so I'd be remiss in not stating that. Okay. I think the team at Drift has built a very, very compelling product, especially in the derivative space. I have to say that, Uniswap, which I don't own any Uni token, I think Hayden has done an extremely amazing job, and the team behind that is creating, obviously, probably the number one biggest paying fee thing, decentralized financial protocol on the Ethereum network, or DeFi in general, and has so many sort of copycats and sort of this constant product exchange mechanism. So I throw those two out there as some.
And do you think we're going to, DEXs will get to the same sort of, quality that is available on centralized exchanges?
I don't know. We'll see. Again, what's your use case, right? Does the DEX need to be as high performance so that, Ken Griffin can go and rip off retail customers like he does in the traditional markets because of the latency aspects? Or is it, hey, I just want to have price discovery such that anyone with an internet connection can connect with other people and trade things free from anyone sort of impeding on their ability to do so? So it depends on the goals. I don't know if you're going to have sort of a high frequency trading shop being able to run the same strategies on DeFi. Maybe that's not something that we want to have happen. And if you want to run that stuff, stay over there in the TradFi world. We have a different sort of reason why we're building these protocols.
Also, like Brad said, there is a group of CoinDesk folks who read your content religiously. I remember when I think your latest blog came out, I had this thought to myself. I might have even said it on air, so I'm just going to say it here just to get it out into the open. I thought, like, maybe Arthur just likes the limelight, the spotlight, like, for the motivations for this blog. And I want to talk to you a little bit more about it. I mean, what drives you to release this content? Your ideas, your thoughts, they're very innovative. Obviously, lots of people follow it. What's the motivation there? Was it reputation building? Are you enjoying the spotlight? Do you really want to share these ideas because you want to see some kind of change in the industry? What's the driver?
So number one, I'm a trader. I have positions at my family office. So the first thing is, this is me creating a cogent argument that's on paper and releasing it to the wild and gaining feedback. And that's extremely useful in terms of organizing my thoughts and having, okay, if I believe this, let me argue it on paper and stand up to the community of people attacking it. That's number one. Number two, I want to spread the mind virus of crypto and financial literacy. I think people don't learn enough about this stuff in sort of their schooling. And if they're able to read one of my essays and they don't understand a lot of it, and they go and they, Google or ChatGPT or whatever to learn more about financial services, and they actually learn something, I think that's extremely useful as well, and sort of spreads this, okay, this is what we can do with a completely different sort of financial system. So I think those are the two sort of main goals for writing these sorts of things. And, it feels great to be right sometimes. Obviously, I get a lot of things wrong, but at the end of the day, as long as my expected value is greater than zero, then I'm a good trader.
I have a friend who is like inveterate horse racing gambler, and he, after like 2 years, he was up $1,000. So positive. It's positive. But yeah, I mean, Well, you know, one of the things that I love about your writing, Arthur, is you really put yourself out there. You really, I mean, if anybody reads your columns, you really talk about your personal experiences, and then you sort of translate that to some bigger lesson that you're trying to, you know, articulate. So I love that about your writing, by the way.
Thank you.
You know, especially the when you're in the bar, usually there's some sort of, you know, some sort of barroom situation or like a club, but yeah, it's good. It's really fun to read.
As a content creator myself, Arthur, how do you deal with the negative comments, the negative feedback?
There's good and bad negative. The good negative feedback is somebody pointing out something in an intelligent way that I got wrong, and I learned from that. And I'm looking for that. I want that sort of negative feedback because that helps me change my mind and change the way I'm positioned in the markets, or maybe I got something wrong and I'll learn something new about a particular area of, you know, macroeconomics. And the other stuff, I don't care. I think it's funny. I get a laugh out of, you know, people making fun of me. I think it's great. All for free speech and that sort of thing. So I love the negative feedback. If you only want to hear positive feedback, you're never going to improve as an investor or writer.
Okay, we're going to do something so fun that I just thought of. So everyone hold on to your seats, okay? I think we should end this off by playing Two Truths and a Lie. And Brad and I are going to guess, and you tell us the thing. So you tell us three things, 2 truths, 1 lie. And me and Brad are going to guess which one is the lie. And make it a little difficult. Don't make it publicly available information.
Okay. Maelstrom has a large portfolio, a large investment in Cardano. My favorite plush toy is Omar the Octopus. I lost money on the Pups meme coin.
Okay, I know the octopus one is true because I think I saw a picture of you cuddling up with this octopus.
That is true.
I think the first one is the lie.
Brad?
I'm tempted. I mean, the first one is so obviously, you know, bait that I'm almost tempted to go for number 3 just for that reason. But yeah, I mean, the obvious one would be number 1, I would think.
Number 1 is definitely a lie. Cardano is completely.
Okay. Get it.
I will never own Cardano and Maelstrom.
Well, okay. I was
because they're never going to have smart contracts.
That would be another episode of this show to hear that. But okay, interesting.
Arthur.
Well, why don't you like Cardano? Just let's hear the serious bear case.
Vaporware DeFi. I mean, great marketing, very engaged community, but complete nonsense. But it's crypto. I love it. We need the Cardanos of there. We need complete dog shit that's worth billions of dollars to go alongside the things that are worth billions of dollars for good reason.
Hey, this is a family crypto media website.
Oh, you say that now. We are too far gone, Brad. We're too far gone. It's too late for that disclaimer. Arthur, we're going to leave it there. Thank you so much for joining us on this episode of CoinDesk Spotlight. It was an absolute pleasure.
Thanks for having me.